Michael Burry, founder of the hedge fund Scion Capital, was one of the few investors who saw the coming housing crisis in 2008. His story is proof of how analysis and determination can lead to groundbreaking investment decisions. In the early 2000s, the U.S. housing market was booming. Banks were issuing mortgages en masse, including subprime loans, loans to people with low creditworthiness. These risky loans were packaged into financial instruments and sold to investors as safe assets. Burry noticed that the foundations of this system were fragile. Analyzing the data, he discovered that many subprime loans had a high risk of default. A key signal was that mortgage rates were about to rise, which meant that thousands of people would not be able to pay their debts. In 2005, Burry made a bold decision. He contacted the largest banks on Wall Street to create a new financial instrument, credit default swaps. They allowed bets that mortgage bonds would fall in value. Burry bet hundreds of millions of dollars against the housing market. His decision was met with confusion and criticism. Associates and investors at Scion Capital were concerned, with many believing that Burry was taking too much risk. The housing market was still rising, and the prices of stocks related to the financial sector were reaching record highs. But in 2007, things began to change. People were defaulting on their mortgages, and the housing market began to collapse. The value of subprime bonds plummeted, and Burry and his fund began to make huge profits. At the height of the crisis, Burry was right. His fund made more than $700 million profit. Burry was right when everyone else was wrong, but he paid a high price for it: stress, pressure, and lack of understanding from others.